All right, we are live. Andy, how are you today?
I'm good, thank you. Sorry to be late. Sorry to keep you waiting, bud. But I'm ready
Okay,
to
no
rock.
problem.
Thank you.
Yep, that's awesome. Well, everybody, I want to welcome you out to the show. We have got our guests that we like to bring on at least once a month. Andy, maybe we'll get you on a little bit more frequently in the future here,
I
especially as
love it.
things start winding up. I mean, we're like I mentioned before, we're seeing news that comes out not on a monthly basis, not on a weekly basis, it's on a daily basis.
It's hard to
And
keep
we're
up
just
with.
seeing
I agree.
so much that's coming out. So, for those of you that are just dialing into the show for the first time, this is Andy Schectman. He's the president and CEO of Miles Franklin. And Andy is also known as the time traveler. I have people putting that into the comments there. But Andy has some great perspectives and great experience when it comes to precious metals, gold and silver in particular, but also when it comes to the macroeconomic situations that the world is facing today. And so one of the things, Andy, that I put out for our subject today, but I know we're going to cover a lot of different things during the stream,
Yep.
is what's happening with the petrodollar. We've seen some things just happen in the last week or two here that are affecting that. And we've also talked about in the past, is the U.S. intentionally killing the dollar, and why may they be doing that? It doesn't make any sense to you. It doesn't make any sense to me. Why would a country want to do that to itself?
Yeah.
So, it'd be fun to cover a little bit of that, but I think more importantly, what I'm hoping will help everybody out with today is, what are some of the changes that have happened in the last 30 days, including the petrodollar? We've heard that China stopped buying gold, and then I've heard that they're starting to maybe resume that to some degree. We still have a lot of questions around the banks. We have a lot of questions around their liquidity, around commercial-backed securities, and then also around what is potentially happening with shorting silver with the large banks. And then outside of that, I think we just have a lot of questions. A lot of people have questions around the BRICS nations, what could happen. And then last, I had a lot of people sending me notices wanting to get your take on the presidential debates that happened the other night. How can that affect the country, and could that affect the dollar and the metals? But those were some of the subjects I wanted to throw out there. But I'd love to just kind of get your take on a few of those things and see what you're seeing out there that you can share with us.
Yeah, I mean, absolutely. You want to start with why would they do this?
Yeah, let's do it. Yep.
My mentor, his name was Richard Russell. God rest his soul. He's been gone for a while, but even back in the day, a decade ago or longer, he was saying that the Fed had just a couple of options, and that would be to inflate or to default. When you talk about where we were then, call it 2008 or 9, you had a 17 or an 18 trillion dollar debt. Now we have almost a $35 trillion debt and unfunded liabilities in Medicare and Medicaid and Social Security alone that exceed 120 or 30 trillion. And you throw in all the entitlements like government and military pensions and the entitlements that are bleeding this country dry. In essence, we're close to, to $200 trillion. One of the things that people don't understand, this country has plenty of assets, but the U.S. government has an asset base of just over $5 trillion. And if you Google it, you'll see that to be true, with the largest asset, as nauseating as it is, being student debt of about 1.6 trillion. So when our knucklehead president talks about, forgiving some student debt to the tune of a few $1 billion, it's really a drop in the bucket in respect to how much student debt there really is. And there was a law passed not too long ago that made student debt something you couldn't bankrupt yourself out of. They'll attach your Social Security in essence. But if I had to guess, I would say they came to the conclusion that they don't like either of those options, that we are broke, we are insolvent, we have a debt that really can't be paid back. 1 trillion seconds ago was 31,688 years ago. Those numbers are so big, people can't really fathom them. And I think that they have chosen what's behind door number 3, and that is to find a villain to incentivize much of the world to shed dollars, to lose our reserve status. And look what's happened with Saudi Arabia. They did not re-up the exclusivity agreement to choose to only sell oil in dollars. And it has been that agreement since 1974 that has given the dollar its hegemony. It's created a synthetic demand for the dollar where every country in the world has had to stockpile them in order to purchase energy. And when you realize, as I've talked about so many times over the last couple of years, that our lead economic advisor, Jared Bernstein, understands this, I wonder what he does understand. He really is kind of a dimwit. And if you look at that video that was on Twitter about him trying to explain bond purchases and money creation, it's one of the most humiliating things I've ever seen. But this is the most senior economic advisor to the administration who really is saying we can't afford to be the world reserve. And so by weaponizing the dollar against Russia, and let's not be nice and call it weaponizing, because that's like calling massive inflation or money creation quantitative easing. Let's call it what it is, and that is stealing. We stole $5 billion of Russian assets and are using them to buy munitions to give to the Ukraine, the country that Russia is fighting a war against. That trust is gone. We have defaulted on our obligations. We have chosen our own aspirations, our own idea of what is considered just, where we can say, to Janet Yellen can say to CNN that if China gives 1 penny to the Russian war effort, that we will sanction their banks, their companies in Beijing itself. Never mind that we've given $260 billion with no congressional oversight to the Ukraine, let alone Stinger missiles and F-16s and the intelligence on where to fire them. We don't count. The world looks at us as being hypocritical. And so when you realize we have incentivized the world first by signing the executive order to go green, pulling out of Afghanistan like a bunch of I don't know what you call it, certainly not American, leaving 3,000 Americans behind, and turning our back on the interpreters and the freedom fighters who were promised visas. This was not lost on the rest of the world. And the escalation of de-dollarization really started right after the pullout in Afghanistan, with Saudi Arabia signing a military protection agreement 2 or 3 days later with Russia. It is our protection of the Saudi kingdom for the last 50 years exclusively that has given us the dollar hegemony. So we have incentivized all of this, and then we turn the country into a place that most of us don't recognize, with the lawlessness and the open borders and the questioning to the judicial system and the electoral system. All of these things I talk about are all part of a bigger picture. And if you believe that they are trying to find a villain, option number 3, to blame all of this on, in order to roll out the CBDC, in order to reset the system, a system that is far too far indebted, way over leveraged in terms of its debt, and way undercapitalized in terms of its asset base, both publicly and in terms of government. It's much easier when you realize that the majority of the debt is owed to the American people. Medicare, Medicaid, Social Security, government military pensions. Social Security, $77 trillion in the whole. Medicare Part B, $99 trillion. Medicare Part D, $22 trillion. All of this debt, and if you look at who's been selling all the bonds over the last year and a half, it's the foreigners who have been traditionally, more or less funding our exorbitant style of living. And it's Japan and China and Russia and Saudi Arabia. All of the BRICS nations are shedding bonds. Yet we're supposed to believe that the Cayman Islands and the United Kingdom and Ireland, all of which who have their own problems, are the biggest purchasers of our treasuries. If you believe that, I have a bridge to sell you. Jim Willey, who I put a lot of respect into his information, his takes, say these countries are being paid under the table to buy our treasuries. And you look at Japan falling apart. Obviously, they're buying our treasuries and our dollars as a lifeline as their yen continues to implode. So there are some, I would call it, less than organic demand centers kind of holding things up right now. But the bottom line is most of the debt is owed to the American public. And when you realize that as all of those nations have been shedding treasuries, it's been us, the American public, that's been buying the treasuries, the money markets, the banks, the mutual funds, and us chasing yield. So as everyone is shedding treasuries, we're buying them, and the majority of the debt is owed to us. So if we can point to a villain, those bastards did it to us. They dumped the dollar. Saudi Arabia is no longer taking the dollar exclusively, incentivizing all of those countries who have held dollars for 50 years and stockpiled them to buy oil, giving them reason to no longer hold them and to sell them and to let them go. And what starts out little by little can very quickly turn into a flood of de-dollarization. And as those dollars hit our shores, the impact is a rising interest rate environment. And as interest rates rise much higher than the 5% line in the sand that I think Powell realizes will blow things up, will be done by the market to compensate for inflation or the loss in purchasing power, not by Powell and the Fed. It'll be done by the market. And at that point, the CPI, which is the CPI, will have to be more forthright and more honest with its valuation of inflation. And as rates rise to compensate for that inflation, the byproduct of rising interest rates, of course, is trouble with the banking system, which is over-leveraged and undercapitalized, with the stock market, which is inversely correlated to this, the bond market, inversely correlated to it. Everything is inversely correlated to it. And when you realize the number 2 economic advisor, Lael Brainerd, is a modern monetary theorist, this is her wet dream. She wants consolidation of the banks. She wants it all to blow up so she can come in and say, look, you guys, I know this sucks. They did it to us. This is about patriotism and starting over and reining in and uniting this country under a common goal. Just take the CBDC and you too will be made whole. Now, is this pie in the sky? Maybe. But when you ask yourself, why the hell would we have done all of these things? Why would we destabilize all of the things that are sacred to this country? Elections, judicial system, immigration system, create lawlessness and craziness in the cities. All of this stuff on top of weaponizing the dollar, on top of creating $1 trillion in debt every single 100 days, if not sooner. All of these things are too stupid to be stupid. And I think there are going to be ramifications for it. And the ramifications will be of massive de-dollarization and de-treasurization. And we are seeing that. In fact, we just saw the head of the BRICS New Development Bank, Dilma Rousseff, come out and say, yeah, we've agreed to a new settlement currency, which will be called the unit. And that unit will be a combination of 40% gold and 60% BRICS currencies. And it's quite fascinating. You can go to the unit website, read their white paper. It's 40, 50 pages. It's worth reading. And their Q&A, it'll blow your mind. And it will all be traded on the Project M-Bridge, which I've been talking about for 3 years.
Yep.
Project M-Bridge is all of these things will massively put a damper on the ability of the West to sanction these countries. And so we've incentivized a new settlement system. You know, people are focused on this common BRICS currency. This system will allow all of these countries to retain their autonomy, have their own system, their own monetary system within a framework that allows settlement in a common settlement currency, but not affecting their own monetary aspirations, their own autonomy. And it allows these countries to join a union in a manner that is cooperative rather than coercive. It is real. It is happening. And when you see Saudi Arabia become a full participant in the Project M-Bridge, this is not something to take lightly. And when you realize Project M-Bridge does not, it does not handle or is not programmed to handle U.S. dollars, and Saudi Arabia, the largest exporter of oil in the world, is now a full participant. Again, you don't have to be a rocket scientist to see where this is going. And then when you see the head of the BRICS New Development Bank say, yeah, we have in theory agreed to use this new unit currency system, which will be 40% gold. Ask yourself, why is it that gold was reclassified tier 1 by the BIS? And guess what? Guess who's involved in the Project M-Bridge? You got it. It is the BIS, along with China, Hong Kong, United Arab Emirates, and Thailand, I believe. And so these countries which are pushing back against the U.S. hegemony are finding ways to sidestep the SWIFT, the sanctioning, to sidestep the U.S. Treasury market, and really are being incentivized to sell treasuries and to buy gold. All of this, you could argue, we have created through incentivizing them to do this. So why do it? Because it's better than option one, which would be massive hyperinflation on our own end, which most governments have chosen, inflate their way out, or two, just outright default. So three, find a villain, incite national unity and patriotism, and make people take the CBDC out of necessity rather than out of force. That's the only thing that I can think of that would at least be logical in a world that otherwise this is the dumbest bunch of moves that a government could have ever possibly made. Instead of clinging to the privilege of being world reserve, we're doing everything we can to tell the world we don't deserve it and we don't want it. That's the best I got.
So Andy, before we get to a couple questions here, what does that bridge look like from where we're currently at to the point where a CBDC is being not only put out there, but people are saying, hey, this is something I want to use?
I don't think they'll ever say they want to use it. I think people will be forced to use it. I think the bridge is a bridge of bombs, in the respect that when you see this de-dollarization and this de-treasurization, it hasn't impacted things yet because it's been very slow and methodical. And that's one of the things I admire about the BRICS union, is that everything they do is slow and methodical and thought out. It is not rushed. It is not hurried. Had they dumped treasuries, it would have cut off everyone's nose to spite their face. Had they been very forthright about their accumulation in commodities, it would have done the same thing. Like you said, China has supposedly stopped buying gold. I don't believe it for a second. I don't even for a second. Yeah. First of all, let's just talk about, and again, I all of this is answering that question, because they're not telling us exactly what is happening. For my entire career, everyone said China is fugazi about the way that they report their gold holdings. And so is the United States, for that matter. Supposedly, we have 8,300 metric tons. It hasn't been audited since 1953. But when you look at China, they produce 400 to 500 tons of gold per year and have been since at least 2000. We're supposed to believe they only have 2,600 metric tons. They're the largest producers and the largest accumulators in the world. They have banks like... I forgot the name of the four-letter acronym of one of the banks that is big in trading on behalf, as a proxy on behalf of the PBOC. But these bullion banks, these banks in China, these state-owned banks, will buy gold and they'll deal with the refineries in South Africa and in Switzerland. That's not reported to the IMF. If they accumulate gold that is not, if it's under 0.9995 pure, well, that's not reported to the IMF. And why would they want to do that? In fact, what they would be incentivized to do would be to accumulate as much as they possibly can, not tell the world anywhere near the amount that they are buying. And forever, everyone said those numbers are massively underreported. In fact, the IMF just came out a month or two ago and said the numbers that China is reporting are massively understated, as did the head analyst for Bank of Montreal, massively understated. But it would make great sense for them to accumulate as much as they possibly can, produce as much as they possibly can, lie about the numbers, lie about the import numbers, and then at some point when gold is revalued, bang, now they are at the top of the food chain, because these new systems like the unit, which again is now confirmed by the head of the BRICS New Development Bank, is 40% gold. And which is what? The only other tier one reserve asset. But who's been buying it all? Oh yeah, it's all them. And so it makes no sense for them to be forthright about their gold accumulation. Quite to the contrary, there are people like Alistair McLeod who will tell you they have close to 40,000 metric tons, not the 2,600 metric tons they're telling you, of which the state owns roughly half and the people the other half. And I would think that's far more accurate reflection than what we are led to believe. It's all about misinformation, if you will, and throwing people off the trail, off the scent. And now all of a sudden I find it less than genuine that the media is trying to tell us, well, this is reality. It's far from reality. Quite to the contrary. So this is something that I think is a trend in motion, where little by little we see these countries positioning. They're selling treasuries, they're accumulating commodities. There was a meeting that just came out of Novograd. At the same time, it was in coordination or very closely timed with the G7 meeting, that the head of the Royal Crown Prince of Saudi Arabia said, "Yeah, I'm not going to come. Thanks for the invite to the G7 meeting in Italy." At the same time, he sent his finance ministers to the BRICS meeting in Novograd, where 59 countries have formally expressed their desire to join the BRICS, where 80 billion in bilateral trade agreements, not using the dollar, were signed on the sidelines. And they did indeed come out and say, this is what we have decided to do. And in fact, have scheduled a special meeting in China in September to discuss the specifics of Project Enbridge and the unit, which would then, in theory, be put on the table in October for their big meeting and announce the legitimacy of it. So what does it look like? It looks like status quo until it doesn't. And it'll be one of these things where when it is announced, when all of these countries have slowly accumulated gold, when all of these countries have slowly de-dollarized and struck relationships in terms of their association with these entities, and like the Shanghai Cooperation Organization, which is growing by the day, the largest regional military organization in the world. All of these unions are being built, and then when bang, they make that switch, it's the all at once. And that's when it's a religious experience for people in this country, as all of those dollars come flooding home and interest rates spike. Can you imagine what this country looks like at 25% inflation and 25% interest rates? What would it look like? Stocks, bonds, real estate, the banking system, the insurance companies, poof, it explodes just like that. But if you do it too soon with trillions of dollars of assets and dollar-based assets within the system, it doesn't benefit these countries. So it will be slow and methodical. But I do believe if you are not a contrarian, you're damn well destined to be a victim. You have to see this for what it is. And it's happening in real time. And to see an admission like this, to see the Crown Prince turn down the G7 meeting, to see the head of the BRICS New Development Bank acknowledge a new system that will allow settlement outside the dollar, see all of these bilateral deals in terms of the transactions. These transactions are being done in other currencies. That chips away at the transactional status of the dollar. And the settlement status being the treasury market, which has been weaponized against Russia, stolen, let's call it what it is, and funding their enemy in a war effort, which is about as stupid as a mud wall in a rainstorm. This incentivizes all of these countries to choose gold over the U.S. Treasury, because not only has it doubled its performance in the last 25 years, and you can see it by divergence right now, where even as rates are going higher, gold is going higher. It's supposed to be the opposite. As rates go higher, gold would go lower. Yep. There's more countries that say, I don't care about the U.S. rates. I want the gold. I'm done with it. And so what you're seeing is a shifting of the guard, and it has to be done in this manner. And I think that's the reason so few people will get it, because the time that it takes for these countries to position properly creates an environment where people blow it off, dismiss it, poo-poo it. It's a nothing burger until it's not. But if you look at the positioning, you look at Saudi Arabia striking these deals, being a full participant in Project Enbridge, and not going to the G7, and all of these things together start to paint a very frightening picture when the switch is flipped. But when 59 countries come out and say we're going to join on top of the 10, you're talking the majority of human population, and all of the commodities and the shipping lanes and all of these things that are strategic are being fortified in a very, very methodical way. And only the people who have been following it as closely as we have for the last several years. I've documented all of this for almost 4 years. And to me, I see nonstop progression. But none of this stuff is reported in the media. None of it. And even though, when you do a video, it might get 100,000 views or whatever, seems like a lot. It's a pimple on the elephant's ass. The rest of the people in this country are blissfully ignorant to what is happening and will be run over by it. And that's why it's easily dismissed. But I think that is a mistake of a generation, to ignore the flow of commodities from west to east, the flow of power from west to east, the choosing of commodities over treasuries, which, as Zoltan Pozar says, is Bretton Woods 3. It's all about commodities. You can see it. And this is not a trend that is not slowing down. In fact, I see it accelerating. And when it snaps, that bridge blows up. And either you're on the other side and have done the best you could to de-dollarize and be a contrarian, or you're caught and you fall into the water with everyone else, loaded in traditional assets, stuck in banks that are the target of this type of action. And that's when Lael Brainerd comes in and says, see, they did it to us. These people did it to us. Don't worry about it. Lael Brainerd is here. Have no fear. Just take the CBDC. Look, she helped develop the CBDC with MIT when she was at the Boston Fed. She ran Point for Fed Now, which is out right now, being piloted by several banks as Venmo on steroids, backed by the Fed. She is a modern monetary theorist. That's exactly the white horse she would want to run in on. So I think it's uneventful for most people until it becomes the biggest event of their lives. For all of us, we should be frightened as hell because we see it unfolding. If your eyes are open to it and you have the ability to have an open mind and see things for what they are, then I think you have the chance to protect yourself, not only survive, but even thrive by looking at what they're doing. They're all accumulating commodities and selling paper derivative assets.
No, and Andy, you had a lot in there to kind of unpack a little bit. To your point, all of the stuff that's going on shows confidence in that the BRICS have confidence, which tells me they have more gold than they're letting us know. Specifically China and Russia. I think the other countries like India probably aren't totally, disclosing all of it either. You don't take this aggressive of a stance and move, in my opinion, unless you feel like you can back it up.
Right.
So I would agree with you that exists. It's there. And now is the time for them to go do this. One of the questions I have in my mind is, how strong are we? How much do we actually have? Do we have the reserves that we say we do in gold? Because if we don't have what we say, then it could be even uglier for us when we go to revalue.
Well, why would we have not honored Ron Paul's request to audit the gold? It belongs to the people. The gold supposedly held at Fort Knox belongs to the people. And, when he floated the idea of auditing it was shot down. And I would ask, what happened to the $12 billion in gold the Ukraine sold to fund their war efforts? What happened to Gaddafi's gold, and what happened to Hussein's gold? Who knows? Did we go in and take it? I don't know. But I find it less than logical for us to believe one Western report that says China's numbers didn't increase for 1 month out of 19, that they've stopped accumulating. And yet we haven't reported our gold holdings since the 50s. It's just a bunch of crap. And, the Chinese understand this, and they're playing the game. They are just the basic fact of producing between 400 and 500 tons domestically per year for the past 25 years. Do the math. Their numbers are way higher than the 2,600 metric tons they're trying to tell the world they own. They probably own 20 times that amount. And they understand where we are going. And that's why they continue to accumulate it. And, you look at a country like China, there was an article just in the floating around the internet right now that their imports of silver have gone up a couple 100%, several 100% in buying silver from the United Arab Emirates all of a sudden. Yet we're told that they've bought almost 700 million ounces of silver in the past 2.5 years, which would be 10 times the amount in the registered category on COMEX, which are the bars available for delivery, which would be almost exactly the amount, just a little under the total stockpile on the London Metals Exchange of the 800 million they say they have. 500 million belongs to the ETFs. They have 300 million ounces. And as I said before on many shows lately, a good example of this is that the LBMA, the London Bullion Metals Association, admits to trading 292 million ounces of silver per day and 20 million ounces of gold per day. Yet they also openly admit that the numbers that they post are as much as 10 times understated. If I buy 10 contracts and sell, if I buy 20 and sell 10, that's a net 10, not the 30 that I did. And so they only post 10. Well, if that's true, that means they're trading upwards ends of 2.9 billion ounces of silver per day, or 3.5 times annual global mine supply, and over 200 million ounces of gold per day. And on COMEX right now, silver is 1,300% rehypothecated, meaning sold over and over and over, the same silver sold over and over and over and over again, 12, 13, 14 times, and gold 5, 6 times. And see, when these exchanges were founded for years and years and years and years, these other countries with the West ruling the roost never had the ability, the desire, the coordination, the wealth, the sophistication to stand for delivery. That is an option. And that is what you are seeing happen now. They are all standing for delivery. And this is the game that they understood they can beat us at by standing for delivery, not caring about the price, not caring about the real interest rate. And that's why you see rates going higher, and yet bond sales are happening as more gold is being purchased. It's supposed to be the inverse of that. These countries don't care about these relationships. They don't care about positive real yield. They don't care about a strong dollar. Give me the gold, give me the commodities, because they are breaking free from this system. That has really frightening implications if you see the path that they are taking. Because as Oltan says, this is a system all about commodities where we are heading. And that's why China has bought the London Metals Exchange, which are all the base metals. And now they are warehousing those metals in China that they're trading, many of them trading on the London Metals Exchange, which they own. This is why they're striking deals all around underdeveloped countries in Africa and South America, and industrializing them and bringing all of their commodities to the forefront and giving them the way to get them there through roads and bridges and maritime channels and railroads, and providing the support to do it, because they understand this is all about commodities, not promises and debt instruments that are opaque, and promises from a government that's pretty much insolvent and, in their estimation, hypocritical and tyrannical. And I hate to say that, but that's the way much of the world looks at us. And that's why they are methodically, quietly, less than forthright, de-dollarizing and accumulating all the things they need. This will accentuate itself and people will wake up, but that will be after all of these countries have positioned themselves properly to where it doesn't matter that the public woke up. The lion's share of the movement and availability will be gone.
So Andy, let's talk about that part right now. I've got a couple questions in here, so I'm going to throw a couple of them up here that we can kind of address together. The first one's from Yankee Stacking. He says, do you see a millennial Gen Z generational acceptance of CBDC, a willingness to trade private information for convenience? Are we seeing generations ready and to accept digital government stimulus? So that's kind of the first part of the question I want to ask you on next. And then let me get the other part up here real quick. This is the other one here is, we've got some people that are looking at the price of gold and silver. I know some people are thinking, hey, it's time to sell gold. Some people are thinking it's time to hold silver, but platinum and palladium look really low. So some people are looking to get in it by buying that. So that's maybe another part of the equation. And the last one here, there's a new person. Let me just find it real fast. Actually, I think that was more recent.
As you're looking, no, I don't see anyone wanting to take the CBDC. But that's the whole point. That's what led me down this path. Like, how do you get people to take a CBDC if it was already fast-tracked? If the BIS has aspirations of every country having a CBDC by 2025, Biden fast-tracking it, Lael Brainerd developing it with MIT, how do you get people to take it? Well, when you realize, and then I take a step back and look at the idiotic things that we are doing that is making the world shake their head at us. And if it were just all of the horrible things we've done around the globe with weaponization and sanctioning, a whole new round of sanctions again put on the Russians and all of the countries that trade with them. And all of these things that we are doing has ramifications. But yet, if we were still admired the way we once were around the world, well, maybe we'd get through it the way the United States always has. And we are divided and we are not united. And people look at this country as a shell of what it once was in every way. And is that done intentionally? And how do you get the reset? Well, the only way you get the reset is for the dollar to collapse. How you get the dollar collapse? No longer tie it to the oil. And we've done that, and no longer make it want. Countries want to hold it. And as they dump it, the byproduct is a massive increase in inflation. And a byproduct of that is a massive increase in interest rates, which blows up the system. And you don't have to inflate because you have the inflation created through that. You don't have to default because they, in essence, did it for you. But now you can blame it on people and reset the system and say, look, we know you've lost everything. We're sorry about that. Take the CBDC. Modern monetary theory is all about printing. I mean, there are people say, why even do we need to collect taxes if it's modern monetary theory? Because it's just about printing, right? And if indeed we issue a new system that is more domestic, that and a protectionist type of environment rather than a global one, yeah, it's a whole hell of a lot easier to do it, and people would take it out of necessity. If your banks were closed, your credit cards didn't work, all of your investments were frozen, your money market accounts were frozen. During the Dodd-Frank Act, not only did they do bank bail-ins, but they did money market gating. There's so much money in the money markets right now, it's ridiculous. And people think they have daily liquidity. I mean, they do when it's normal. But money market gating is real. They impose legislations on that because many of the money markets were being run by Lehman Brothers. And when Lehman blew up, people who had money markets all around the country were not allowed to access those funds. In fact, I'm on a show with Liberty and Finance every Tuesday. Dunnigan Kaiser just told that story, and he said he still has not got back all his money, never did, since the great financial crisis because of the money markets collapsing. It's called breaking the buck. And so when you talk about all of these things that make people feel safe and fuzzy in that environment, it all blows up. The villain did it to us. Take the CBDC or starve. And I think you'll never get anyone to want to take something that curtails your privacy, where, if you go to, the dispensary in a state where it's legal to smoke weed and buy a joint and then go buy a pack of cigarettes and a beer, you're now on a list as a derelict. Well, or you're playing poker with your friends and lose $100, you're a derelict. People don't want this. Or worse yet, you don't get a vaccine and you're out and about, your account is frozen. What are you doing? You're supposed to be at home. And all of these things that people can think about in their mind's eye, how crazy could it get? The erosion of all privacy and the implementing social credit scores and all of these things like we see in China. No one wants to take it unless you're forced to. And the best way to force it upon you is to do it in a patriotic manner where we are doing it because we have no choice. As far as platinum and palladium, I don't like palladium. Most of my career, palladium was a fraction of the cost of platinum. Then it went nuts. It doesn't have virtually any history whatsoever as being a monetary metal. It is an industrial metal. Platinum is intriguing. It has a similar story that silver does in its relationship to gold. To me, it represents a very tertiary position at best to a gold and silver holding, because the world doesn't think of platinum when it comes to preservation of assets. I mean, it's 10, 12, 15 times more rare than gold. Most of my career, which is 34 years, it was as much as double the price of gold, or always more, until over the last several years where that's changed. Most of the production is in South Africa and in Russia, making it, something where, you could see physical shortages. To me, it's an investment where gold and silver are wealth. I think it's okay, but I would not do much more than in a typical metals portfolio. 10, 15% at max of my metals I would dedicate to platinum. I think palladium, I wouldn't touch it right now. Not only does it really not fit ideologically in my beliefs, but from a standpoint of the way the dealers look at it, there is a massive bid-ask spread on it. The volatility and the lack of demand, you're going to see huge spreads on buy and sell as a result of it. It would have been better to buy it a decade ago when it was $300-400 an ounce, half the price of platinum, and really not looked at as something that could explode in value. But at this point, I'd stay away from it.
Okay, so thank you for that advice, Andy, because I know a lot of people are asking around that. This kind of goes along with that as well. People are wondering, when could this potential change in the gold to silver ratio? Recently we saw it get down to the low 70s, and we've also seen it as high as the 90s, in the last year or so. So I know some people are considering playing the gold to silver ratio. I know you've talked about that in the past. If we're looking at gold and silver as our primary holdings and precious metals to offset, any money we may have in a money market or a 401k. For example, I've got a 401k with my company. It's stuck. I can't take it out. I can either put it in the stock market in basically tech stocks, or I can hold it in the money market. Those are my two options. That's it. And, so I have to have that decision of, do I continue to take the tax write-off of putting money into my 401k with the risk of it being held hostage? Or do I just not do that and put it into precious metals? Because right now, until I leave my company, which I don't know if I will do and when that would be, those funds are basically kind of held there. So, that's kind of a side to it. But when you look at the ratio, is this something that could be potentially played in the next, year, 2 years, 3 years? What are your thoughts there?
I think that we're living on borrowed time. I mean, it should have happened already. It's coming out of the ground at 7-1. It's the fact that they're able to trade, 2.9 billion ounces of silver per day on the LBMA, and to see, 3.5 times global mine supply annually traded in a day just on one exchange. That doesn't even take into account COMEX. And when you see the amount of silver that's being accumulated by the big money, yes, it's baked into the cake. In 2010, it was the first time I noticed a deviation in the gold silver ratio. It was 85-1. I called Bix Weir and I said, Bix, we got to do a podcast, brother. This is the first time. This is the second time as far back as I can go in human history that we've seen an 85-1 ratio. We need to tell people to sell their gold now and buy silver. I'll sell it to the market and we'll switch them to silver. And this would have been mid-2010, and anyone who would have traded an ounce of gold in theory gets 85 ounces of silver. Keep in mind that over the last 150 years, the average price has been roughly 42-1. That's man's price. God's ratio has been 7-1, or 16-1 rather, for 5,000 years. Of course, now that it's found in nature in a form called epithermal, very near the surface, and the big deposits were found long ago, to the point where 25 to 35% of the silver that's mined or that comes to market comes from primary silver producers. That's it. The rest of it is byproduct, where companies mining other metals altogether find it. And so, but going back to 2010, within 7 months, you had $50 silver and 1915 gold. That's 37-1. In 7 months, you would have only needed 37 ounces to go back into 1 ounce of gold rather than the 85 you started with. So yeah, I think it can happen very quickly. And the distortion on COMEX and on the LBMA, I think, is what is hindering this from happening. And as I've talked about on several podcasts lately, when you see the bleed down in Shanghai silver, it tells me that we are getting very close to that moment, because when 4 of the biggest commercial banks, HSBC, Deutsche Bank, JP Morgan, and Standard Chartered, who are all massively short silver, show up in Shanghai the second week in March. And from that day, they each came. One came the second week, then the third week, then the fourth week, and the first week in April. The price of silver started to come down. And not only that, the Shanghai silver stockpiles started to fall down. You can export gold out of China, not silver, or you can export silver out of China, not gold. So what were these banks doing at the Shanghai Metal Exchange? Go to their website. You will see they document. They were all there. And from that day, just like that, they said to them, we're screwed. There are countries standing for delivery. There are people standing for delivery. We need help. And I think they did. I think they helped them out on some form of quid pro quo. It was not done to be benevolent. But it's interesting that as soon as those banks start showing up, so too does the depletion of the Shanghai inventory. And when you realize the LBMA said we have the lowest level of silver in the 140-year history of the exchange, and COMEX keeps getting bled down, they're running out of the ability to hold down the paper price. I really do think that. And it's as if maybe one of these days they will hoodwink the managed money into going short. After all of this time, people are saying, why isn't it going higher? Well, so are the managed money, and they'll go short. They'll sell their longs to the central bank or to the commercial banks who take the other side. They will buy shorts, which means the commercial banks take the long. They will hoodwink these traders into going short, and then they will let it run. What is different about the silver market and the commercial banks, and by the way, there's a really great chart that is floating around these days, and it shows the concentrated position of 4 and 8. The 4 and 8 biggest commercial banks in the West, they hold by far the largest concentrated short position of any single commodity traded on the COMEX market. It's in silver. Now, why the hell would that be? And so when you talk about this massive concentrated short position, what they have done in years past is they do what you're not supposed to do. What did everyone do with GameStop and AMC? They shorted it, right? And it was falling, short, as it falls. What the commercial banks do is the opposite of that. They suck in the speculators and starts going higher. And then they start to short a rising price and more until it just falls on its own weight. The margin calls become prohibitive. The crushing of the direction of the price, you have to have a really big checkbook, and they do it in a collusive manner where these commercial banks overwhelm the longs and the rising price, and it falls. And then as it falls, then the commercials take the other side, and they start to take the longs, and they then go long and let it go up again. And then as it goes up again, sucking in the speculators, they rinse, wash, and repeat, and they just fleece the managed money over and over again, and they never learn. One of these days, they'll stop shorting a rising market, because what is the hallmark of this system? And you could argue this will happen with platinum too, and it is why, to a degree, I understand the platinum argument. I mean, from a standpoint of profitability, it could be fantastic because it's the same thing. Huge short positions by the commercial banks, shorting a rising market. And when there is not an ability, see, none of these countries stood for delivery. It is an option, but they never did. Even going back to 2019 and before, no one stood for delivery, a tiny amount. And now they're all standing for delivery, understanding that it is these naked short positions done to the umpteenth degree, with the inability to get this metal out of the ether. It is the Achilles heel of the system, and where they are, I think they understand this, and that's why you see, like, for example, there was a contract developed by the CME group, the COMEX, in 2015 that allows for physical delivery of gold and silver in Hong Kong, BRICS Hong Kong, which is a COMEX vault. And it's interesting, we saw $500 million worth of gold delivered there 6 weeks ago Friday off of the COMEX exchange, all in kilo bars. Well, the kilo bars only represent a small portion of the contracts on COMEX. Most of everything is done in 100-ounce bars. The mini contracts are kilos. Why would they be delivered to Hong Kong in kilos? Well, the Shanghai Gold Exchange deals in kilos. So they will have, by proxy, a bank or a sovereign wealth fund on the private Globex market. They will stand for delivery, take $500 million worth of gold in kilo bars delivered to Hong Kong, and truck them over to the Shanghai Gold Exchange and sell them there, where we're seeing massive deliveries, where countries can sidestep sanctions by selling their oil for yuan and immediately convert it into gold in the Shanghai Gold Exchange and take delivery, where over the past 75 days, the cumulative demand has increased, or volume has increased by over 200%, surpassing the COMEX. It is actually a market that has greater volume than the COMEX does now. number 2 in the world behind the LBMA. These are trends that are accelerating, but this is all about the paper side of things that is blurring it. So yeah, I think there will come a time where the gold to silver ratio becomes the trade of a generation. And if all that happens where we reach a 200-year average, it's a double, which would still be 6 times higher than it's coming out of the ground at. And the question becomes, at what point does what you're able to mine it for and the price have to kind of align? We're in this bizarro world right now where you can pull it out of the ground at a 7-to-1 ratio, yet it's priced at 80-to-1. That doesn't last for very long. And I think when you see countries like India massively draining the Western exchanges and now buying way more than they ever did from the United Arab Emirates. In fact, let me see the exact number. The exact number was the silver imports from the UAE skyrocketed from a modest 2.2 million US dollars between January and April 2023 to an astonishing 1.44 billion during the same period this year. That represents a staggering 654-fold increase. And so you're seeing them any way they can get as much of the real thing as they can. And these numbers, you think they're reported to the IMF, all these dealings that they're doing around the world in gold and silver and platinum and commodities. So yeah, if you just understand that the law of averages or regression to the mean is real, then you play the long game and understand that these averages are there for a reason. And like I say, it's like waking up here in Delray Beach, Florida. I live on a golf course on the first tee box. I have 2 snowmobiles back in Minneapolis in my sister's garage. And if I woke up to 3 feet of snow in the backyard here in July, I wouldn't call my sister and say, hey, send me my snowmobiles. I'm going to go for a ride. It's an anomaly. And even though it is an anomaly that is lasting longer than some people can say solvent, it's still an anomaly in every respect of the word in terms of geologically and historically. So yeah, I think it will happen. I think it's a trade of a generation and the value for sure of the decade. So hang tight, have strong fingertips. It will play out. Now, to your point, as far as the 401k, if any of you own a 401k but don't work for that employer anymore, regardless of the fact if you're going to buy metals with it, get the hell out and open up a self-directed IRA so you can self-direct and not be inside of a 401k that is very restrictive and prohibitive. Within a self-directed IRA, you can buy physical metal. And I guess to your point, you'd have to make up your mind for yourself. Is it worth it to take that deduction and the little bit of matching, hopefully, that they're doing for you? If they're not matching you, then I wouldn't even do it anymore. And I would just open up a self-directed IRA and start funding it yourself and buying gold inside of it. But we are at one of these points in time where you have to do things very much alone, because the financial advisors you would talk to say you're freaking an idiot. What are you talking about? Selling it because you're afraid of what? That'll never happen. And that's the thing, is that you have to, it's a lonely existence having these feelings. The money managers will think you're an idiot, but you probably know more than they do, because a lot of these people know more and more about less and less until they know everything about nothing. They're looking through a peephole at the world rather than seeing it for what it is. And that's largely due to the fact that our media doesn't do anything to alert the people to what's happening. So you have to trust your gut and follow it. And unconventional times, brother, call for unconventional action.
Yeah, I agree with that. Okay, so I've got a last question for you here. And then we'll start to wind it down in a minute. But I'm going to throw it up here. So I've got a couple parts around this. So we've got, we've talked about gold and silver being monetary metals and being kind of the foundation of a hedge. We've talked about platinum being more of a investment that you could make. And so I would reiterate what you're saying too. I definitely would make sure I got to a goal and a certain percentage of gold and silver before I played around too heavily with platinum. So I'm going to throw that out there. Another play of that is there are a lot of people that are looking at Bitcoin and trying to figure out, hey, is this maybe a future way to hedge against inflation? Or is this really more of an investment that I might be making? And so to kind of round that up, Andy, what I wanted to ask you is this. Do you have any advice as far as when you're looking at your precious metals portfolio Do you have a goal that you're setting or a percentage that you're buying now of silver to gold? So do you have any recommendations there? You kind of mentioned platinum already, so we'll leave that alone. And then the third part of that would really just be around Bitcoin. Is that something that you see as being more of an investment, or does it play the same role as gold? Is it actually a digital gold, in your opinion?
I'm happy to answer that. And then I want to talk to one question in there, comment from, I think someone's name was Maple Leaf, about the BRICS still using the dollar, which is fine.
Yep.
As far as silver to gold, look, you know, you can have $1 million worth of gold in a briefcase. $1 million worth of silver is going to weigh, you know, way over 1,000 pounds, couple thousand pounds for that matter. I think over time I've been accumulating it for 34 years. I mean, I'm probably pretty close to, God, I don't know about you, by the way. I moved to Florida and I get the worst allergies this time of year. Apologize. My eyes just keep watering and watering. I've never had allergies my whole life. So I think it's worked out to pretty close to 50-50. Look, silver offers much better potential and has far greater volatility. To me, gold is it's the only other tier one asset in the world. And when you see the fact that the new unit currency will be 40% gold backed and redeemable, not for the public, but for the countries who use them, gold has a very significant role. And it's interesting because gold is held in all of the central bank balance sheets in something called the gold revaluation account. And you had the head of the Dutch National Bank not too long ago say, I don't worry about our balance sheet because we have gold in the revaluation account. And even though it is not considered an asset against a liability, we know it's there. In other words, they can flip that switch. My feeling is that all of these countries that are incurring massive amounts of debt know that they have gold in their revaluation account. So does China. Why would they tell us how much they have? Someone will revalue gold. Maybe it's the BRICS nations. Maybe it's China. And look, they're already, silver in Shanghai is almost $4 an ounce higher. What is the real price? What if they said it's $40 higher and silver is now $70 an ounce, and anyone who had the ability to send silver to Shanghai would do so. And now that is the real price. And so the real price is what it is being offered for globally. I think gold will be revalued. There is no reason that the BIS would have reclassified it as the world's only other tier one reserve asset. There is no other reason why every central bank on the planet owns it and has been accumulating it and repatriating it. There is a list of, 30 or 40 countries that have repatriated all of their gold from the New York Fed and the Bank of England. Many of them just recently. India, as an example, just 2 weeks ago, 3 weeks ago, they bought 1.5 times the amount of gold in the first 4 months of this year than they did all of last year, and repatriated all of it, plus 100 metric tons that were being held at the Bank of England, i.e. the London Metals, LBMA. And all of these countries, including Saudi Arabia and Egypt and about 7 African countries, Algeria, South Africa, Nigeria, a bunch of others, they all just brought their gold back from the New York Fed, i.e. the COMEX. And so, I think that I think that it's really important to realize that this is something that is a slow moving changing of the guards, if you will. Gold is being remonetized across the globe, period. And I think that it is, in the end, where you want to be. Silver is the most undervalued asset on the planet. But again, I still think that from a standpoint of monetary theory, it will be gold. And when I look at Bitcoin, I'm not a Bitcoin naysayer. I'm someone who has dabbled a little bit into it. My friend Mark Moss and Natalie Burnell took me out to lunch in Vancouver and opened my eyes to accumulating little bits of it. Certainly not the way that they have, but I don't want to be sitting in this position commenting on it forever, looking at it and saying I should have done it. But, I think it is one of these deals where, once it got created, once ETFs were created, and of course, even before that, the COMEX contract, it lost its purity. So it's not the same thing that it once was in my mind, but it's compelling enough to me to own it. My biggest comment on it and any other cryptos, like I own Theta. I think it's great. I couldn't tell you more about it than 30 seconds, but Big Squeer talked me into it and said you need to own it. So I did, and we talked about it on a long drive from from Texas to Oklahoma, and I bought some. I own a little XRP. I mean, again, I'm dangerous when it comes to talking about this stuff. I don't know it, but my main comment would be there's no reason for us all to be adversarial about it. You walk into the door for the same reason, because you understand the system is broken, right? And yet the only difference is my camp goes right into the preservation door, and the other camp usually goes left into the profit door. So if you want to make all this profit in crypto, great. Take some out of your pocket and put it into physical metal that has a 5,000-year history, that is now tier one asset that all the central banks are buying. In a world where commodities will be, I think, the focus of he who has a commodity makes the rules in this next go around, I would say hedge your bet and don't go mutually exclusive on one without the other. We do not need to be adversarial. We should be complementary, I guess is all I'm saying. And as far as the comments saying, the BRICS countries are still using the dollar, yeah, I do know that, until they don't. In the meantime, they're striking unilateral deals with one another, or bilateral deals with one another, rather, and they are developing other payment systems that are not allowing the dollar to be part of the party. Enbridge is not compatible with the US dollar, and Saudi Arabia just became a full participant. And all of these countries are buying gold and selling treasuries because the treasury market has performed 1/2 as well as the gold price has since 2000 without the counterparty risk. But this can't be all at once. And that comment is the exact problem with the way everyone in this country looks at things. Immediate gratification is not fast enough. If you can't see the slow moving trend that once it snaps will be game changing tremendously, but these countries understand you can't do it that way. You have to backfill and have all of your bases covered. This is why China is not forthright about how much gold that they own. And this is why you're seeing all of these unions being done. At the end of the meeting in Novigrad last week or 2 weeks ago, they said 59 countries have expressed interest in formally joining BRICS, but they didn't tell us who they are. They want they want to give us just enough information, but not enough to damage their aspirations in any way. And this is about one of these deals where, you're given all of the clues. Either you put it together for what it is, or you fall on the side of recency bias and normalcy bias. And I can understand how people would normally do that, except for the fact that this country has lost its freaking mind. And look around us and 10 days ago, we were told all of those videos of Biden staring off into space were fake videos. And then we saw the debate. Well, where the hell did all of those people go that were saying that? How about for the past 4 years, the whole Western media who has been protecting him, when the rest of us look at this guy and say, if you were being wheeled into the operating room for heart surgery and you met Dr. Biden, would you go through with it? If you were walking onto a flight to go cross continent and meet pilot Biden at any time over the last 4 years, would you have gotten on the airplane? And yet all of this Western media, now they turn on them. Now they've had this big eye-opening experience. Where the hell they've been? We've been lied to and gaslighted. And so I think the bottom line is that, the same thing is true here. The West is not preparing any of us for what is happening. They're not telling us. I would encourage you, like, for example, there is just a search engine that you can use that I use a lot. I'll give people a little clue here, called Yandex. And another one is Baidu. Well, Yandex and Baidu will give you real information as they go around the world. This is not a US-based search engine. And start reading websites from around the world. Start reading reputable places from around the world, and you will get a whole different impact and view on this coalition of countries that is becoming emboldened in every way and legitimate in every way. And yes, they're still using dollars because it still has its supremacy, but I would argue it's lost its hegemony, and next comes the supremacy. Don't know when, but when you see a common settlement currency being approved and admitted by the head of the BRICS New Development Bank, that is the beginning. That is the fuse being lit. And Project Enbridge, which allows all of this trading of this new currency settlement unit to be done outside the SWIFT system, while allowing all of these member countries to remain autonomous from one another, have their own monetary system within a guideline that they must uphold to be allowed to trade on the new unit. These are things that are happening that will change the game forever. Not until it's done. Ooh, hello.
We're still here. We can hear you.
Oh, I lost my. That was weird. Do you still hear me?
Yes.
Oh, that's so weird. There you go. Okay. I don't know if my power went out for a second and the generator picked it up. That was weird as heck. The screen went blank. Anyways, that's my 2 cents on all of this. It's one of these deals. You better trust your gut and do some due diligence on your own. Don't just listen to me. I spend 3 hours a day or more every day, 7 days a week, scouring the world to find this information. And I'm of the mindset that is 100% real. But I do see how people would have a hard time accepting a lot of it, because what do you believe? Do you believe your gut or your lying eyes? And that's what you need to come to grips with. And if you do research outside the Western edifice and start looking at other sources, you might look at things a little bit differently.
I agree. And on another podcast you did recently, you were even talking about the banks and about a bail-in, just as an example. We don't need to go into all the detail on that right now, but something like that could easily be a tipping point or a trigger that all of a sudden gets everybody to wake up very quickly, and there's not going to be a lot you can do about it. It's the same thing we talked about with 401ks, with money markets, right? If money markets, all of a sudden there's a stop to pulling your money out of it, you're kind of stuck. And so I think, to your point, what's wise for advice for everybody here, I can't give you financial advice, but I can give you real world advice, which is, be your own bank, have assets close to you. That doesn't mean you have to put them in your house. They can be in a private safe deposit box nearby. They could be in a vaulting facility, but have assets that aren't controlled by one entity. And that goes for banking too. If you have to have money in the bank if you're going to be doing like online bill pay, for example, or you're going to be moving money around, or you receive money from someone. I've started to get a credit union, a regional bank, and now a national bank. So I kind of spread my money out in a few different places, and I have a trust, and some of it's in my personal, some of it's in my trust. And then I like to keep stuff close by in case the ATMs aren't working. And so I think, the key is, and that goes with precious metals and money, currency, I should say. The key is to be prepared, spread out your risk. What about the cryptocurrencies and, about Bitcoin is, and I would kind of reiterate this too. If all you have is a few dollars, silver is probably your best bet to go. Once you start to have more money, you can get into the gold. Having a good portfolio of those two can be very strong for you. And when you get to the point where you can take the risk and make some more money, that's where I see crypto being something that can, benefit people. But, to your point, I think all of us can get along, and all of us are after the same goal at the end of the day. We all want to kind of be on our own bank and have self-sovereignty. Mark Moss lives, not far from where I am. I'm hoping to personally meet him one of these days. We've got a close friend tours for his YouTube channel too. But Mark goes into a lot of that, and he's also been pretty heavy into gold and silver in the past too. So it's interesting to hear these different perspectives and gain it. And so I think that's one of the reasons I love having you come on, Andy, is we're able to understand concepts that maybe we don't know. I love that you repeat a lot of the same concepts over and over, because repetition is how we learn. It's how things stick into our heads. And one of the comments was, do you ever get sick of repeating yourself?
Let me bring that up for a moment. And I'm the first one to agree with that. And I do. Yeah. I think that there are very few things in this system that matter. And yeah, I try and tie in the current events into a different narrative. But I will say this, and the reason I focus on just a narrow band of information, almost everything that I said, that I have been saying since 2019, when no one was saying it, has come true. All of it. And I remember going on a show. His name was Snafu Radio, and I apologized to him for saying I kept talking about the tier 1 revision of gold and how the dollar could lose its petro status in 2019, 2020. People are saying it'll never happen. He keeps saying that, and then it happened. Almost everything I've been saying, and the fact that it keeps on happening, none of the other shit matters to me. It doesn't matter. And if you don't see that this is the single biggest macro event that will change everyone's life, then you're missing. The rest of it is noise. I look at the periphery. I talk about the things that are added to this greater narrative. But yeah, I mean, I don't think anything else matters. And we've all grown up in an environment where it's our birthright to live better than our parents and our grandparents. And I would argue this might be the first generation right now where 30-year-olds aren't living better than their parents did at 30. Things are starting to change. And if you don't see it for what it is, and you stick to conventional wisdom, if you stick to recency and normalcy biased, I think you'll end up being in trouble. So no, I don't get sick of saying it. I think I want to hammer it into people's heads and get it across. And I've been right. And I think when you are right, and I don't say stuff like that, I don't brag, I don't say I told you so, but I think you then have the right to continue to say it, because a lot of people don't get it. I don't know how many people haven't heard me talk before on your show, but it's the most important thing, period. Yeah, I'll continue to add things into it, but no, I don't think anything else matters at all. I truly don't. I don't think anything else matters at all. And as it pertains to bank bail-ins, how many people even know that bank bail-ins were written into legislation in 2009? How many people know that money market gating was written into legislation in 2009? Maybe people on your show, but I come across people every day, guys I golf with. I golf with 40 guys every week, and on a Friday and Saturday, and a lot of them are business owners, and none of them I talked to them all about it. They have no idea, zero, about bank bail-ins. These are guys that are wealthy, successful, and very intelligent, and they have all their money sitting in one account in Truist Bank, $7-8 million of operating capital. So you're out of your mind. And when we talk about where to put your money, you had mentioned some other things. One of the places that I would add to it, everyone's got all this money in money market funds. They can be gated, meaning you lose access to it. And like I said, my buddy Dunnigan still hasn't got his money back from 2008, never will.
That's crazy.
When it was turned upside down. One place to put excess funds would be Treasury Direct, treasurydirect.gov. Go right to the U.S. government, disintermediate anyone in the middle, and buy short-term treasuries there. I think the minimum is like 10 grand that you can buy, but there's another good place to park excess money than leaving it within a banking system, which, we've been told for a long time. Powell said there will be consolidations. You can see that there will be. And that's what Lil Brainerd wants. And she wants there to be bank consolidation so that they can issue a CBDC to a handful of banks rather than to 5,000. So no, I don't get tired of saying the same thing. I understand how people will say that. I don't take offense in it, but I do it knowingly, because as far as I'm concerned, this is the only story that matters in the long run. When you talk about macro, to me, it's all that matters. I hope I'm wrong. I haven't been yet. And that's why Jake, God bless him, calls me the time traveler, because he's been following me since 2020. And the things that I was saying, nobody was saying. And they've all happened. Now everyone's saying them. So yeah, I'm repetitive, but it comes from a good place. It comes from a place of sincerity. And but I do change what I talk about every week, at least a little bit, all following a similar theme. But no, I don't take offense in that.
I agree. So just a quick shout out. Thank you for the super chat to Frostbite Coins and Collectibles. If you guys haven't checked his channel out, go to do so. Also Andy's channel as well. I know the mods have been putting your link in there. And then OC Stacker for the 5 gifts of the membership. Thank you. That helps people. But But Andy, that's why I love having you come on here, is we can hit a very similar message in a tight period of time that is very important. The moment that those bank bail-ins happen, everybody's going to lose their minds that doesn't know about them. And so the more people we can wake up, the better. And it's the same thing
All it
with
would
the
take is
CBDC.
one.
Yep,
Just one, because no one understands it. No one believes it. And the banks that have failed so far have been either two were illegally bailed out. And that's why there's that YouTube video. Just Google Oklahoma Senator grills Janet Yellen. And she said, yeah, you're right. It was an uber majority vote of the FOMC, the FDIC, myself, and the president to bail out Silicon Valley Bank and Signature Bank, but it won't happen again unless there's an uber majority vote. In other words, it's too systemic to the system. But the other banks were gobbled up by regional banks or JP Morgan. That won't happen when a big bank fails or several fail. And all it will take is one bank to be bailed in. And the chaos that would ensue, a bank run across the board. Remember, in 2020, all of these banks were given the right to relinquish all reserve requirements. So these banks do not have any reserves. You go there and want your money back. They don't have them. They have to liquidate an asset first. This is what got them all in trouble. The assets they had were mortgage-backed securities and treasuries that were underwater. To liquidate them to meet redemptions, put them out of business. Well, those reserve requirements haven't changed, and nor has the attitude of the banks. So here we are again, not learning from our mistakes. And you see one bank get bailed in. And the FDIC has 4 years to pay back the unsecured general creditors. What you are no longer. It's not a deposit. You are making a loan, an unsecured loan to a bank, and you are the last person to get paid if you are an unsecured general creditor. And so anything over FDIC, which is BS. 140 billion in assets backing 18 trillion in deposits. The whole thing is upside down, yet no one knows it. And that's why I keep hammering on it, hoping that I open at least one person's eyes along the way, because all it will take is one of those banks to be bailed in, and watch what happens. It would be like lighting off a whole brick of firecrackers, one after the other, bang, 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 bang. They would all, across the whole U.S., people would be running to pull all their money out, which would create a daisy chain event. That's exactly what a modern monetary theorist would want, because now you have all of these banks that get blown up, consolidated, and you issue a CBDC to make everyone whole. If you take it because you just lost everything, take the CBDC. That's exactly what Lil Brainerd would want. So I guess we'll see. But those are some things that I think are pivotal to opening people's eyes that have no idea what's coming.
I think so. And the last thing I'll just add to that is my family, I should say my grandma's savings loan in the 60s, and it was taken out along with all the other savings and loans in 2008. I don't have empirical proof, but everything I could see, it all had to do around reserve numbers. The company was still worth all of its assets, didn't disappear overnight. Overnight, it went from that institution to a new institution, basically was handed over all these assets. It was a theft, in my opinion, for any of the shareholders who were there. Now, of course, all the savings and loans were getting into subprime lending. There was a lot of things that they were into because of needing profits for shareholders. So there's a lot that I'll probably go over in a future video with people. But the reason I wanted to bring that point up is to believe that they don't want to consolidate the banking system, I think, is a huge mistake for people. I think when they see an opportunity, they take it. And that was an opportunity for them to not bail out the savings and loan industry. They did bail out the big banks because they were too large to fail. Well, they didn't bail out WAMU. That was a massive savings and loan. It was bigger than some of these other banks. So when this next one comes and they start to do bail-ins again, I think that's what's really going to happen. I don't think they're going to do any more bailouts. I think they're going to let them fold. And I think that, and it's going to basically cause runs. And to your point, I think that is one of the most logical cases for when they institute a CBDC. So I could see that definitely happening. Well, Andy, thank you for coming on today and sharing that information with us. If people want to get in touch with you and Miles Franklin to either you've offered in the past to answer questions for people. Some people are loving your t-shirt. I don't know if those are t-shirts that you sell or not, but I'm thinking of doing some designs that are somewhat similar because a lot of people are looking for something to help wake people up when they're walking around the streets. How can they get in touch with you at Miles Franklin?
The best way to either ask questions or to get a price list we keep close to the vest that will be as good or better than anywhere in the country would be to send us an email at info@milesfranklin, and in the subject line, Stacking Surfer sent me. Any questions? If you want to be contacted, put a phone number. If you just want the price list, ask for it. And I think that'd be great. We'd love to talk with your people. And I love coming on your show. I'd come on as often as you'll have me. You get it, you understand it, and you also have a very broad perspective of what's going on. And I think that's important nowadays. So it honors mine. You know, if you can deal with me following a single narrative, but I will continue to talk about other things that fit that narrative. Look, I spend 20 hours a week or more studying, so I understand all the stuff that's going on, but to me, a lot of it's noise. But yeah, info@milesfranklin.com. Stacking Surfer sent me, and I'll look forward to picking up where we left off and hopefully talk to some of your followers in the meantime. And I do hope everyone has a great 4th of July. And again, I'll look forward to hopefully chatting with you again real soon before too long.
That sounds great. Well, Andy, thank you again for coming on. And for all of you that didn't get to see the whole thing, go back and watch it. We had a great show today. So anyway, Andy, thank you. Have a great day.
Thank you, man. You too. You take care. Bye-bye.
Bye-bye.